Right now, the global financial system is changing faster than most people realize. Inflation, rising interest rates, and global tensions are reshaping how money moves. But here's what many investors don't see yet. Some of the biggest fortunes in history were built during moments exactly like this. Could the years leading to 2026 become one of the biggest investment opportunities of this decade? The best investment opportunities rarely appear when everything feels safe and stable. They appear when the future feels uncertain, when headlines are filled with fear, when investors are confused and markets are volatile. Think about the moments that once felt terrifying: economic crises, market crashes, and periods of high inflation. At the time, many people believed the worst was still coming. But years later, those uncertain moments often turned out to be the most powerful opportunities for patient investors. Today, the global economy is undergoing several major transformations. For more than a decade, interest rates were extremely low. Money was cheap, borrowing was easy, and markets experienced one of the longest bull runs in history. That era has changed. Central banks around the world have raised interest rates to control inflation, and technology is accelerating faster than ever. Artificial intelligence, automation, digital infrastructure, and new business models are reshaping industries. Whenever economic change and technological transformation happen at the same time, markets rarely remain calm. But these periods of adjustment often create opportunities that only become obvious years later. One of the biggest forces in investing isn't technology or economics, it's human psychology. When markets rise steadily, confidence grows, and investors feel comfortable taking risks. But when markets become volatile, fear spreads quickly. People imagine worst-case scenarios, check their portfolios constantly, and react to every headline. Sometimes they make decisions driven by emotion rather than strategy. Experienced investors understand that markets often exaggerate emotions in the short term. Prices can fall faster than fundamentals change, and when that happens, opportunities sometimes appear quietly beneath the surface. Instead of reacting to every market movement, experienced investors focus on long-term principles. Diversification is one of the most important. Rather than relying on a single investment, they spread money across different assets: stocks, real estate, private businesses, and sometimes commodities like gold. This balance reduces risk when one sector struggles. Long-term thinking is another principle. While many investors focus on what markets will do next week or next month, patient investors think in years, even decades. They ask, which industries will grow in the future? Which technologies will reshape the global economy? Which businesses will survive and thrive many years from now? This shifts focus away from short-term volatility toward long-term opportunity. During major economic transitions, opportunities often appear in areas connected to long-term global trends. Technology innovation is one example. Artificial intelligence and automation are transforming industries from healthcare to finance. Infrastructure is another opportunity. Many countries are investing heavily in energy systems, transportation networks, and digital connectivity. Then there are businesses that quietly